Welcome to my accounting tutorials. Today we're going to talk about the 3-column cash book. The 3-column cash book is not very different from the 2-column cash book. The only difference between the 2-column cash book and the 3-column cash book is that the 3-column cash book I get as an addition of the discount column. It is an addition of the discount column, so that differentiates from the 2-column cash book. Now, under this discount column, we have the discount allowed and the discount received. So now, the discount allowed, let me give this example. Suppose we go to our supplier, we as a business, we are the ones now going to our supplier to get goods. We buy goods, we on cash, and then after buying all those goods, we allow the discount level. Like we buy goods worth 10,000 and then the supply is impressed because of the huge purchase that was made. So the supplier is impressed and then he says, since you purchased goods worth 10,000 kwacha, instead of you paying this 10,000 kwacha, I'm going to allow you a discount of maybe 1,000. So instead of paying 10,000, you end up paying 9,000. That is a discount received, not a discount allowed. That is a discount received on our part as a business. And it is a discount allowed on a part of our supplier because he's the one that has given us that discount. So he has allowed us a discount of 1,000. Instead of paying 10,000, we end up paying 9,000. So he has allowed us a discount of 1,000. So to his part, it's a discount allowed. To our part, it's a discount received because we've gained, the business has gained. So we are the one receiving a discount of that amount. So now, suppose it's us now, we the business. A seller, a buyer comes to buy goods from us, maybe 15,000. And then they are impressed because of a huge purchase which that person has made. And then we say, okay, since you bought these goods worth this amount, we are going to allow you a discount of maybe 2,000. Instead of paying 15,000, you will pay 13,000. That 2,000 is a discount allowed now on our part as a business, and we are going to take it as an expense. To us now, it's a discount allowed. To that person that was buying goods from us, it's a discount received, and we are going to. That person is going to treat it as a gain, but we are going to treat it as an expense because it's a loss to us. Now, we have been presented. This is how a discount. This is how a 2-3-column cash book looks like because the provision for the discount. You see, now we have a question that has been presented to us. We have a question that has been presented to us. So I'm going to read through the questions. I will dictate. If you have a pen, you can write down these questions that are my question here. The first transaction, hope you have your pen. The first transaction happened on the 1st of, this is in the month of August 2015, included here. So on the 1st of August, we bought goods. From Emutogo worth 3,000 kwacha by cash. Less 10% discount. Bought goods from Emutogo worth 3,000 kwacha by cash, less 10% discount. So that's the first transaction, less 10% discount. So now, this is the question that has been presented to us. We bought goods from Emutogo worth 3,000 kwacha by cash. So now, we have two accounts here, the cash account and the cash account. So now, this Emutogo, this is the person that was giving this item with this amount. This is the person that was giving this item with this amount. Is the one who is giving, is the giver. So if we go back to the golden rule, what happens to the person that is giving? We do what? We do credit. So we're going to credit everything of account, and we go to the golden rule principle, which says that every debit transaction is a credit transaction. You will discover that the opposite is what we are going to do to this cash account. So since we are convinced that we are crediting to the account, definitely we are going to get it the cash account. So the cash account is going to be what? Debited. So the cash account is going to be debited. Cash account is going to be debited. So on June 1, we purchase goods from Ntoro. On June 1, we purchase goods from him. Now, we say after buying, this person allowed us a discount of what? 10%. So if you go back to your grade 5 mathematics, 10% is the amount that was given. Was a discount that we have been given. Because when you buy goods from this person and you got in place, so he allowed us a discount of 10%. He allowed us a discount of what? 10%. So 10% of 3,000. What is the 10% of 3,000? So 10% is always 0.1 and the 3,000. So 10% of 3,000 is going to give us what? 300. So this is the deduction. This is the amount that was deducted from the amount that we are supposed to pay. So we are supposed to pay 3,000, but 300 was what? Deducted. So we ended up paying what? 2,700. 2,700 is the amount that we ended up paying. We ended up paying 2,700. So this person is the one that was giving. We were receiving the goods. We received the goods. So the receiver, cash account, received the goods worth 3,000 or 2,700. 2,700, and we received a discount of how much? We received a discount of 300. So this is the discount that we received. End of story. On the 2nd of June, we received cash worth 200 from Chibwe. We received cash worth 200 from Chibwe. So in this case, we received cash from Chibwe. So what happens? Chibwe is Chibwe's account is a personal account. So under personal account, you credit the receiver and debit, we credit the giver and debit the receiver. So in this case, Chibwe is the one who was giving. So Chibwe was giving. So since Chibwe was giving, we are going to credit his account, and we are going to do what? The opposite. We are going to debit the cash account. So we receive goods from Chibwe. We receive goods from Chibwe with 4,000 by check. So whenever I say by check, means there was a bank account. So we receive this amount from Chibwe by what? By check. So Chibwe was the one giving, and we are what? Receiving. So what we have is the receiver. We do what? We give it, and we don't forget to put what? The symbol for currencies. For currency. That country where you live, do not forget to make sure that you put the currency. The other transaction, on the third We paid Kisanga 500 by check. We paid Kisanga 500 by check. So Kisanga is the name of the person. So Kisanga account is the personal account. What do you do in the personal account? You credit what they give and debit the receiver. So paid Kisanga was received. So we debit Kisanga by check. We are giving Kisanga by check. So meaning the bank account is receiving and Kisanga's account was what he. The bank account was giving and as account was what receiving. So in this case, and received what that amount. So they're going to debit and as account and credit the bank account simple. So on the page, it's the Sanga here. The Sanga who received an amount with what 500 by check. So we are the ones giving. So check is the bank account. We are the ones giving the credit. How much? 500. Simple. And then on the 4th of August, paid cash into the bank. Cash with 600. Cash with 600 kwacha. We paid cash with 600 kwacha into the bank. This is the contract. I already explained this in the two columns cash flow. So here we have cash bank. It's a contract entry. So the bank received and the cash. The bank is the one which was receiving. So what we do is we receive and we debit by how much? 600. So 600. The bank will take 600 cash with you. Very simple. The contract entry. Then on the 5th, we sold goods by check. We sold goods by check. Goods worth 600 kwacha, 6,000 kwacha, 6,000 kwacha by check. Less 5% discount. Less 5% discount. So in this case now, we are the ones who are we are the ones who are selling. We are the ones who are selling. So after this person paid the budget from us, we bought this 6,000, we are impressed. So we allowed a discount of 5%. So in this case, we were the one who allowed the discount of 5%. So it was treated. We treat it as an expense because we are the ones who are allowed this discount. So we treat it as what? As an expense. So already 5%. Before this person got, he sold these goods. This person was supposed to pay 6,000 for the goods that we sold to them. But we are deducted this amount by 5%. So 5%, according to what your teacher taught you in mathematics, is 0.05 times 6,000. So what is 5% of, that is the 5% of 6,000. That's the 5% of 6,000. 300. So 300. 300 is now that was deducted. So 6,000 minus 300. What are we getting? 6,000 minus 6. We're getting something like 5,700. We're getting something like 5,000. We're getting like something like 5,700. Yeah, 5,700 is the amount that we are getting. So instead of selling this goods at 6,000, we ended up selling these goods at what? 5,700. And that was, we are the business now. We are the ones who are selling this and we allowed the discount. It's going to be, it's a loss to us, so it's going to be treated as an expense. So it's qualified to go include a discount allowed column. Discount allowed column. So we sold goods by check. We sold goods by check. As I said, there's a sales account and the bank account here. There's a sales account and the bank account. So we have the sales account. The sales account. So these goods, we sold goods by check. We sold goods by check. So sales account was the one giving. Sales account is the one giving, and the bank account is the one receiving. So sales account was giving. Sales account was giving. The bank account, the sales account was giving. the sales account was giving, and the bank account was receiving. Yeah, sales account was giving, the bank account was receiving. Because we sold goods by cash. We sold goods probably we sold goods with 600 by check. And if you go into the real accounts, cash we can only see it comes into the business and when it goes out of the business. So in this case, we sold goods by check. So in this case, we were the ones giving. We were the ones giving the goods worth 6,000 because the goods, we were the ones selling the goods. So those items was being sold by cash. So meaning the sales account should be credited because the sales account was the one now giving the goods at that particular amount. So the bank account was receiving. So the bank account was receiving. So the bank account received how much? 5,700. The bank account received 5,700. And what? Then we allowed the discount of what? 300. We allowed the discount of 300. So it's going to appear on the discount. Allowed. It's going to appear on the discount allowed column. It's going to appear on the discount allowed column. On the 6th. Purchase goods by check. Purchase goods by check. Purchase goods by check. There are 2 points we go through. There's the purchases account. There's also a what? The purchases account is also a bank account. So purchase goods by check. There are 2 accounts involved with the purchases account and the check and the bank account. So purchase goods. Purchase goods by check. Purchase goods by check. So the purchases account in this case was what? Receiving. The purchases account was receiving and the bank account was giving. So we went there, the business, we purchased goods. So the goods came into the business. And what do we do with the goods that comes into the business? We do what? We something that comes into the business, we debit what comes into the business, we credit what goes out of the business. So purchases account in this case was receiving. So what do we do to the opposite? We credit. So the bank account should be credited. So purchases, we have 600, purchase goods by check, we have 600. So in this case, the bank account is going to be what? Credited. The bank account is going to be credited. Then what the 7th transaction, which says there's the 7th and last transaction says paid wages in cash. Or paid wages in cash. That's the last transaction, paid wages in cash. There's paid wages in cash for 3,000. There's 4% discount. There's 4% discount. Paid wages in cash 3,000. That's the amount, the amount of money that was paid to Wadia. That was the amount that was paid to Wadia. This is the amount which was paid to Wadia. Paid Wadia 3,000 by cash. There's 4% discount. So we were the one now who were paying Wadia. So we paid 3,000. So imagine we are now the one now who are buying goods from this value. So after buying goods, we paid this value 3,000. We are supposed to pay 3,000. But since value was increased, maybe by the number of goods that were bought, we allowed us a discount of 4%. So what allowed us a discount? Allowed us a discount of what? 4%. So what allowed us a discount of 4%. So instead of buying these goods at 3,000. So 4% is 0.04 times the amount 3,000. Where this 0.04 is coming from is something that we did in mathematics. You can find so 0.04 by 3,000. That's 120. That's 120. So instead of paying this person 3,000, we ended up paying them how much? So 3,000 minus 120. We ended up paying 2,880. We ended up paying 2,880. So that's the amount that we ended up paying. So that 120 was a discount that was allowed. So this is the discount that we received. So what they allowed us a discount of 2,880. Oh, allowed us a discount of 120. So we ended up paying 2,880. So this one to us it's again. It's again to value. To us, this is again. So value paid. Warrior 3,000 in cash. We paid Warrior. So cash was going out of the business. And Warrior was the one now receiving in personal accounts. Warrior under personal account is the one who was receiving. So what do we do with the receiver? We do what? We debit. So what happens with the opposite? Cash was going out of the business. So we do what? We credit. So we're going to credit cash by this amount. We're going to credit cash by this amount. 2,880. 2,880 is the amount that we are going to that we paid. And then we allowed us a discount of how much? We allowed a discount of 120. So the usual. We are going to balance these things off. We are going to balance them off. So we are going to balance them off. Sorry. It's supposed to be, supposed to be like something like this. Yes. Yeah. Something like this. My line is but make sure whenever you are drawing, use a ruler. Accounting is very important. Always use a ruler. So here, for the discount, you just calculate the total. Discount received, the total is what? 300. The discount allowed, the total is what? For me, it's giving me 420. Giving me 420. And then now let's calculate this now. So we have 400 plus 600 plus 5,000, 5,700. So we have 6,700, we have 6,700, even here 6,700. Yeah. That is the bank account here. We have 6,000. Was this one, the figure that we're going to get here will be smaller than this. So now here we're going to get about 500 plus 500 plus 600. We're going to get 1,100. So this one, we subtract it from this 6,700. How much are we going to have? We have 5,600. That's the amount that we're going to push here. And this will be our balance carried down. This will be a balance carried down. So here we write balance carried down. So it will be, this will be our balance carried down. And this value will also come here. And the amount of money that you amount to remain in the following month. So equal with this. So you just have the total 700. We are going to have this 600 plus 2,800. 2,880. So 600. 665 plus 2,880. I'm going to get 3,400. Easy. Easy. Not a great price. Yeah, so we're going to have 3,480. Don't forget to be putting payments. Then we will have 7,000. 2,700, 2,700 is going to subtract it from this amount, 3,400, 3,400, 3,400. So we have a difference of 700, so we are going to put it here with our balance, write it down, and we're going to also put it here with our balance, wrote down. So this is how you saw the three column cash. So without complicating things, the only difference between, there's no need for me to even start teaching this single column cash, two column cash book and everything. This three column cash book provides a solution for a two column cash book. So a two column cash book, the only difference is that it has no discount format. You will never find a transaction where they will tell you to say there was a certain discount received, whatever, there was this discount, whatever. No. Whenever you see that question, just know that it's a three column cash book, because that's the only book that has a provision of a discount column. So whenever you see a transaction saying bought goods worth this much, but with this discount allowed or received, just know that it's a three column cash book. A two column cash book, there is no addition of this. There is no discount. There is no provision for a discount column. So if this was a two column cash book, meaning this part, the discount part, is going to be raised. It's not going to be there. It will just have a bank and the cash account, and everything remains the same. There you'll be given direct transactions. Simple transactions, they won't be anything like this, what, 10% discount, less than 10% discount. No. There it will just be bought goods by cash. Bought goods will be 10,000 by cash. Then just know, we just enter it on the cash side and like that. Bought goods by check, we enter it on the bank side and everything. So the only difference between a single column, a two column cash book and a three column cash book, that a three column cash book has a discount column, but everything is just the same. The bank, the cash, everything is just the same. It just has the cash account and the bank account. That's the only difference. That's the only difference. If you are Shala, it is just the same. The same. So if this was to be a two column cash book, meaning this part was not going to be there. This discount part, it was not going to be there. We just have the date, details, cash, bank, that's all. That's a two column cash book. And a three column cash book, there is this. So everything is just the same. So whether I did a two column cash book or don't it, there is no difference. This is just it. So if it's a two column cash book, just remove kama discount if it's if you cash na bank, kama discount yani itakudi. And if you column cash book, you fully kako discount column. So this has been today's tutorial. On my next tutorial, we're going to talk about the trial balance, the ledgers and everything. So that's the end of this tutorial.